I'm coming on here today to talk about SoFi's stellar earnings report. They delivered great numbers, and I'm going to be diving right into it. Before I do, please leave a comment, like this video, as well as subscribe if you guys enjoy. That being said, let's get right into it. So, SoFi just delivered great earnings. They did 858 million in revenue this quarter, as well as 8 cents of EPS, which the prediction for that, or the estimate for that per se, was 6 cents, and they were supposed to do about 802 million in revenue, and they beat that as well with 858 million revenue. Shocking analysts, blowing past their own guidance, and even many of the us as investors guidance. And so I'm going to talk about a little bit about the numbers, what this means for SoFi's future, as well as somebody who might be invested in the company. So that being said, I'm going to start with member growth. With member growth, we can see that they're doing 34% year over year growth, as well as 17,142 products. That is very bullish. It just shows the cross-selling. That's the biggest thing SoFi has talked about, is their flywheel and being able to cross-sell one. So maybe you join SoFi for the student loans, and then you're like, oh, you know what? Let me set direct deposit up with them. And then once your money's in there with SoFi, it's like, oh, they have a very nice brokerage. Let me set that up. And it's just cross-selling them into the ecosystem. And that's been SoFi's main goal this whole time, is just becoming this one-stop shop. And it's becoming more and more clear every day what the future holds for SoFi, especially as they get level 1 options in here. They get more into crypto. They talked about getting into staking, doing crypto-backed lending. So there's a lot of runway here for SoFi to go. So seeing the 34% member growth, always bullish, and then see that they are getting people on more products, that's also bullish as well. So a big talking point was also the fee-based revenue. One of the bear cases have been that SoFi doesn't get enough fee-based revenue. They make too much money off of their loans and it's limited by their balance sheet. Well, because of the loan business platform and some of the other fee-based revenue sources that they have, they are now making 378 million of their revenue fee-based. So that is 378 million of the 854 million in revenue they did, or was it 58 million in revenue? Let me look. 858 million revenue they did. So it's getting close to half of their revenue that they make, which is another bullish thing to see, that okay, this isn't being limited by their balance sheet. They're making fee-based revenue. It limits risk to the way they are making money. So that is also bullish when I look at their fee-based revenue ramping up. That is growing 72% year over year, so very bullish there on that end. We also saw that their adjusted EBITDA margin continues to grow. That is up to 29% now. In 2024, it was at 26%, and then going back even further, you got 21%, and then just 9% in 2022. So to see that continuing to grow is also a very bullish sign here for SoFi. Now, it's kind of crazy to look at. When you look at personal loan originations, they've done 12,506,000 in originations. In 2024, in all of 2024, they did 17,615,000. So they are not far behind what they did in 2024 already for all of 2025, and we still got another half of year to go. Then you also look at like 2023, they did just 13,601,000, and they're already at 12,508,000. So that just shows the major growth we have here in the personal loans originations. You also can look at student loans. That's been a little bit more cyclical. After 2021, you know, they got hit with the student loan forgiveness, and it's been on a steady growth ever since. And so far this year, we are at 2,185,000. We're getting into student loan refinancing season, and just like student loan season with college coming back in session. And last year they did 3,781,000 all year. So it'll be interesting to see how that pans out the rest of the year. And then you got home loans, and that's had some growth. And last year we saw a big jump in there, and it already looks like they're about 3/4 of what they did last year. Right now they're at 1,317,000, and this year they're so far at 1,317,000, and last year looks like they did 1,820,000, which was a big jump over there, just 999,000 in 2023. So it's the loan business and lending um, originations for SoFi has been really strong, as well as we know um, this also does include the loan business platform. So all those numbers include that, and where they don't have book value risk, and then some of it is also their own. When you look at net charge-offs for SoFi, we can see that student loan net charge-offs actually rose a little bit, but compared to the other segments also dipping, there's really no alarms here. Student loan net charge-offs are low, so I'm not really weighing anything against that. It's actually the lowest out of the three segments, and the other two are trending downward. So that doesn't really raise any red flags to me. And then you continue look, technology platform segment, that was a little bit of a talking point in which it actually looks like they might be going back into growth now in quarter two. They did 110 million. That's up from the 103 million they did in Q1 and the 103 million that was Q4. So it is looking like the growth is starting to ramp back up now that the Chime members are probably off. So that is good to see. They are also guiding for, I believe, was 20%. Yes, they're looking for 15% year-over-year growth. So that's good to see. And then we know in 2026 we should be seeing a lot more members being added on from partnerships we've already made, but it just takes time to switch these companies over onto the tech stack. So that will be good to see come Q1 2026 and Q2 2026, see how that affects the growth. And I want to end talking about guidance, because in past videos I've talked about my guidance for SoFi, and I was saying, oh, I'd expect 30 cents of EPS by end of year. I've never really said any revenue predictions, but I did expect 30 cents of EPS because the history with SoFi is they always beat their numbers. And when I was trying to make sense of their 55-cent to 80-cent guide of 2026, it only made sense to me that they'd at least do 30 cents of EPS, despite them saying, what was it, in the beginning of this year, they were saying like 27 cents, and analysts were a little bit lower than that, I want to say. And to me, it only ever made sense that they did at least 30 cents of EPS, because then that would be, to double that, you'd be then at 60 cents of EPS come 2026, and that's the lower range of their wide range in 2026. So I always stuck on they're going to do 30 cents of EPS at least. And that's how I always looked at this stock as super cheap, because I'm like, okay, at $15 with pretty much 2x and profits over that time frame, it didn't make sense to me how they could just be a $15 stock. And I mean, it was a $13 stock at one point during this year. I think it was this year when it was at $9 at one point during the tariff stuff. So I was like, it never made sense to me. And so I was a believer in 30 cents, but they came out and they raised their guidance. They're now saying 31 cents as their guide. And that's with them. They always sandbag. So they're saying 31 cents now. Now I'm gonna expect 33 cents. They already beat my guide. So if they do 31 cents, I'm not upset. I already set my guide for the year and what I expect as an investor. But now, just using the logic that they sandbag a lot, now I'm like, okay, they're probably gonna do 33 cents of EPS now. So we're gonna really start seeing this ramp. If they do 33 cents this year, what would we expect come next year? I'm starting to think, upper 60s, lower 70s is what we do in EPS, and that just shows the compounded growth that we have going to 2026. And he also mentioned, Anthony Noto mentioned, for the decades to come, he expects the company to keep growing at a 20% rate, which is absolutely insane. I want to say it's 20%. It might have even been 30%, but don't quote me on that. I would check that for yourself, because I don't know if it's in here. I saw it on Twitter earlier, and I don't think it's mentioned here, so I think he probably said it on the call or on his CNBC interview this morning. But I wanted to mention that. And then as far as revenue, they're guiding for, I want to say, 3.3 billion in revenue here for 2025. I jumped over that. Let me check that real quick. Yeah, so we are guiding for 2025 3.37 billion in revenue. I'm not sure if that's different than what was original. I assume with EPS growing, but they're also growing their margins. So that is, and they're growing their fee-based revenue, which helps the margins. So it's exciting to be holding SoFi. Sadly for me, some clarity here is I had some covered calls on it. They might get called away. I might be forced to sell at 20 if this thing never takes a dip. But I'm gonna be happy with the profits. At the end of the day, it was a 70% gain for me in a year on just one name. So uh, I would definitely buy back in. You know, SoFi, it pumped, then it sold off. I'm sure I'm gonna be able to buy at 20 at some point and just act like I never ended up having to get rid of my position. So I'm still excited for this company. I've watched this thing when it was $6. I watched it when it was 7, 8, back to 6. So it's been a long time coming, and it's cool to see them finally getting the recognition they deserve. If you guys enjoyed this video, please drop a comment, like it, hit the subscribe button, become part of the family. And thank you guys for listening to this video, watching this video, and have a good day.